Okay, everybody, welcome to a brand new episode of the Speculators Podcast. In this episode, we're going to be talking about online funding. Over the last several years, the popularity in online funding has exploded. Some people love it, some people hate it, some people are undecided. But this topic I have brought up across multiple of our previous guest episodes, this idea of online funding. Do you like it? Are you a fan of it? Do you think people should be doing it? And so in this episode, we've taken out all of those individual clips and we've combined it here into one supercut. So if potentially you're a fan, or if you're not, or if you are undecided, you can listen through what our previous guests have had to say about it, and hopefully this will be informative and you can draw some of your own conclusions. So with that being said, let's kick back, let's relax, and enjoy this episode of the Speculators Podcast.
What do you think the future of online prop funding looks like? Different than it is now?
Very good question. That's where the puck's going, Corbs. Yeah, I think it becomes smarter. Here's what we're thinking at Top Step. We have traders that are trading. We have your trading data. How can we take your trading data and help teach you about your behaviors? Once you know more about your behaviors, how do you then mold their weaknesses into neutral, or help them learn how to leverage their strengths? Everybody has had a good day. How do you then take that good day and try to replicate that good day? It's not only about the strategy, because you can say, oh, I got a strategy, but you have to have also your psyche in place. You have to have your behaviors in place. You have to know when to trade and when not to trade. That is, being a trader is not trading, and knowing when. All these things you can really feed back to them, and really no different than how Fitbit or whatever can kind of get you to go for a walk, get you to get up, get you to do things that are better, healthier for you. And that's really when we turned our mission and to turn people who trade into better traders with healthier habits, because to create longevity, that's good for the brokerages, that's good for the CME, that's good for regulatory, all the C, is helping traders learn how to manage their risk and get them to last longer. Not, the average trading account that I've heard opens up with $10,000 and closes within 6 months. This is active traders, and this is, of course, hearsay. And there's hearsay of 95% of traders fail. So what if we could move that success rate from 5% to 6 to 7 to 8? So that's what I'm hoping the industry helps traders do. But there will be the folks that always want it, easier, faster, and cheaper. Which is fine. You just got to look at, is that really going to help you get to where you're trying to go?
Yeah, I think it's very, and we talk about this quite a bit. It's very easy to just optimize for the wrong thing.
Mm-hmm.
And unfortunately, a lot of our culture prompts us to be doing this, to where you can put so much time and effort and money and energy into getting funded, and getting funded is not really the goal. The goal of being a successful trader is very different than just what it takes to try and secure funding, especially at a discount broker or a discount funding company. So just kind of what you're saying, even the future of online funding, getting more involved on the performance side of things, which would be amazing, because I think there's a lot of tools and information that people either don't have or they wouldn't know what to do with, and just to have somebody point that out is very powerful.
And I think that's what a trading community needs. It needs a community that's supportive. It needs a community that looks to develop each other and hone each other, kind of like a professional. Like, consider the evaluation, the trading combine, which it's called the trading combine because the NFL has a combine, the NBA has a combine, and they evaluate talent out on the playing field, and they're in the bleachers. I talked to you about wanting to be a scouting agency for traders, and that's really what the trading combine is about, is helping them develop and hone. And then when they're getting there, sure, they can go off on their own and to open up a personal brokerage account, and they're going to have much better fighting chance because they're more pre-qualified to be able to manage their own capital. But we're right there saying, hey, Corbs, we want to bring you up. We want you to trade our live capital, 90-10 split. And that's something that benefits really there. I don't know. You gotta be really in it to help the trader, or else you will get washed out, so to speak. And all these competition that's there will eventually filter out, so to speak. I mean, when new industry started, Union Pacific, Burlington, you know, railroad started, you had these big players that came out of it. There's a lot of railroad companies. You can go to the next one. You can go to, you know, your search engines, your Yahoos, your Googles, your dog piles, and all, you know, you got one, you know, you get these couple, 2 or 3, 4 or 5 that are going to be on the top of the game. And the other ones I think are just, I call them mom and pop shops that pop up, and they're looking to just sell it easier, cheaper, and faster. And I don't think that's, I don't think that's using the tools that are in front of you that the industry even has, like journaling. Do you even encourage anybody to journal? Do you, you know, develop a journaling ability? Some of these companies don't even have trade reports. They just have out of the box subscription model software, you know, that they just buy, and they, you know, oh, and it just connects to the back end of some back end provider and creates accounts, and there you go. Help that person out, help that person understand how to become a better trader. And we have free coaching now. We pay our trading psychologists and educators. We pay them for their time, and they come on, and we don't charge our free education here at Top Step. This is quality education. We have free coaching. These are coaches that have either worked on the trading floor, screen traded, or seen thousands and thousands of traders, because we see them in the back end. We see guys up 10 grand, and at the end of the day, they're down 3. You know, you just, and we'll reach out. And the last thing I really have to say about this is don't get me wrong, we have people that come over to Top Step and really aggressive at their trading. We now implement, like, if you are resetting more often, and, you know, I'm not going to give the example so everybody can follow, but like if you're resetting a lot, of you're doing things that are aggressive, we have basically people watching the risk management board, triggers that happen, and they'll send it out to you and say, hey, Corbs, let's pump the brakes. You know, you reset 3 times in a day. It's not healthy. It's not helping you. So we're looking to also slow that down, help people, take a break between a reset or starting over. Some people start over, some people reset. All that helps. Live to trade another day. Always trade for tomorrow is what we always say.
Do you trade exclusively funded accounts? Do you trade your own personal? Do you trade both?
So right now, only funded accounts. It's been that way for 2.5, 2 years, something like that. I stopped trading my own money and moved it into some other stuff, looking into some real estate and things like that. I think the risk reward, when you're in the States, at least, because of the taxes, the risk reward to trade with their money, the leverage you get and everything like that, like not actual leverage, the buying power that you get when you get funded is what I mean. It just is, it makes more sense. If I can pay $4,000 to $6,000 to get $1 million account, which in theory is really, like, I guess some people will comment on this and be like, it's 100K of buying power, whatever. If I can still turn 4,000 to 6,000 into that much buying power with no downside other than that initial investment, to me, that's worth it, especially when you've put years into learning how to trade. I could deploy a swing trading strategy there. I could do my day trading there. I could do so many different things. I'm such a believer in the funding stuff, Aaron, that I think it's going to pull from Fidelity and Vanguard, a small chunk of younger generation people that should be dumping money into ETFs or something like that to just invest. I think they're going to try to become day traders, and they're going to go to these funding companies rather than put the money with Fidelity and invest $100 a month, blah, 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 like they tell us to, right? So I think it's very appealing. And then on the tax side of it in the States, I mean, you're a world traveler now, so every country has different rules. But in the States, when you make income, they tax you. When you spend that money, you pay tax. When you put the money into a trading account and you make money, you pay tax again. So they tax you in every way in this country. It's awful. And we left the British because of taxes, but here we are. So when you trade with a funded account, you can set up your LLC. You can do a couple of certain things that an accountant can help people with to be advantageous to your trading, where let's say you make $10,000 in payouts this month, but you also signed up for a couple of courses and a couple of mentorships that also equaled $10,000. You would then look like you made $0 that month, even though it was, you could move money into some personal and pay yourself a salary. There's other ways to do it once you have consistent money coming in through the funding accounts. So I think just because of those things, it just makes a lot of sense. Are you for it or are you against it?
Yeah, I'm both for sure. Are you saying that you think there's a better tax advantage? Because most of those things you're saying you could do with, your own money as well.
100%.
You think it's a better tax advantage to trade the funded account and get taxed that way, as opposed to, I guess I'm looking at this from futures, which are actually different than I think maybe what you're trading. You would say that trading with your own capital is less advantageous than trading and getting taxed through the firm?
Yes, I'll pay more money in taxes to get the same amount of buying power in the market. rather than if I was to trade with a funding company. I'll get more buying power with less taxable events occurring if I'm to use a funding company.
I get what you're saying now. Okay. Got
Yeah.
it. As far as, no, I'm a big fan. Kind of recently, I think that I think there's zero reason nowadays to begin trading and start trading with your own capital. If that's down the road where you want to transition to, and maybe it's advantageous for reasons, but to me, one of the biggest issues with trading is getting started and surviving. And what's very common is we come into trading, we don't really know what we're doing. We don't really know what this road looks like. We don't really know how difficult it is. We take 5 grand, we take 10 grand, we take some of our own money, put it into an account, we lose it. And very easy to do. And it's very easy to start building up in the back of our mind these post-traumatic stresses to losing our own money. It hurts, it causes pain. And when we then enter the market, most of us start off being very undercapitalized as it is. We're already undercapitalized, and now we have these emotional baggage issues. They just get reinforced, and it makes doing the right thing incredibly difficult. It makes just trading for the sake of trying to make the right decision very difficult. And when you walk into a funded account and all goes to hell and you blow it out, you're out nothing. And you can sign up for another one and really start to learn this thing and kind of go through this. The way that we explain it is you got to have this like proof of concept phase. We learn this stuff. It's great. You've gone through a certain amount of testing, but you got to get in the market. We got to do proof of concept. Do that on a funded account. And if you want to keep going with the funded accounts, keep going with funded accounts. If you're silver spoon cool, or if you just got a lot stored up and you're ready to go with your own capital, fine. But at least get that proof of concept phase through funded accounts. You got to. I mean, it's just like a necessity.
It sounds like you describe it almost like a glorified demo account. It's a smaller investment, but it gives you more stake in the market, more care about it, rather than going and dumping 20 grand of your own money into the market. I've talked to so many people that dump $20,000 in. They hit me up when they've lost 10 and they want to recover the other 10 in a few months. And it's like, that's a shitty place to start your trading career from. Like you said, a lot of you're probably not going to keep trading. You're probably going to never do that again. Right.
Yeah, I would even say maybe even a glorified demo account, almost like a crappy live account.
There you go. Yeah,
same thing. Is risk reward, right?
Sure.
And that risk reward element is important to learning how to trade.
Yeah.
And when the reward is I get a funded account or I lose my investment, which in some cases, like in the futures market, it might be $60. That risk to reward is very nice, as opposed to rewarding. I grow my account, I could make, who knows. But if I lose this, my risk is this is my last $5,000.
Exactly.
Yeah, very.
And I think the most interesting thing about it is how competitive the space is getting. It makes it fun. Like I feel like it's revitalized retail trading. Like I think if you look back in retail trading, and we did a project together and we looked over the years, there were big moments, big pivotal moments when retail trading first got access to the internet. That's a big moment. When E-Trade dropped their commissions from $10 a trade to $0 or whatever it is, there's these big moments. And I think these funding companies are creating a moment here and it's the competition that creates that's going to be good for us, I think, as a retail trader, especially for a newer guy or girl coming in for their first couple of years of trading. Like you said, it's a great way to go and cut your teeth in a market that is very close, if not a live market. You get to trade with some capital that'll keep you in the game. I mean, how many people, again, bro, we both know many people, I'm sure more than on our fingers and toes, that have funded $1,000 account and blown it all out and then funded it again with another 1,000 and probably done it 5 or 6 times. Those people should have just started with 100 grand, learned how to take losses in a 100 grand funded account, learned how to take losses. They never would have been blowing out accounts, feeling that negative, seeing that email of getting you know what I mean? They would never have experienced those negative moments that maybe guys like me or you have had to go through, and fight through.
Now, I know you are a big fan, I guess, from your channel of online prop funded accounts, or prop firms, should I say, where you'll put up a small amount so that you have, I guess, some risk in the game. They'll have some parameters that you stick within. If you pass their testing, you then get to trade their capital. There's a profit split involved. So kind of what turned you on to that, or what's your, take on that? Because I know a lot of people have maybe a strong opinion one way or the other about it. And from what I can tell, you're a big fan.
Yeah. So, and only now because of the micro. So it's all changed in the last 2 to 3 years, right? Because the original, the prop trading has been around for a long, long time. Retail prop really on the futures side started with Top Step in 2013, right? They basically started the category, and they were the only one in the category for a good period of time. And then 2019 with the launch of the micros, and then when the pandemic hit, we saw an explosion. So there's a lot more, it's a very crowded space now. So so that's the first thing, is that it's really grown from one or two players to multiple players, which is a consideration that I think people should know about. The reason I'm a fan of them is because I've just been doing this for a very, very long time. I built 7-figure training and education sites in FX. I built them in stocks and options. I built them in futures. And everyone lost money in every asset class, but they lost it the fastest in the futures markets. Just got obliterated, right? And at some point, you need to offer the market something that has a potential to help more people than it hurts. Not that I'm saying that people like you and myself and anyone else who is doing our best to show people the ropes from the charts on out into what it takes if you're really serious about doing this. Unfortunately, there's just a vast majority of people that will fail or not do what they need to do to be successful. So these programs are not perfect, but they offer opportunity for the folks that are going to abuse them and have little success live or otherwise to lose less money and before they leave the business. And for the select few that do the things correctly, like I mentioned, some of my, I don't call them students or clients, I call them collaborators. I mean, I have some stuff that I can't share publicly that's literally astounding, where we're talking about people that have a cost basis in these programs of several $100s. When you say risk, there's no risk. They're just buying a product. They're just buying a subscription, right? There's no skin in the game at all, right. Which is one of the things that's not beneficial about these. But anyway, we're talking about people have parlayed a return on investment that is bonkers, like beyond bonkers. Now, is that a 1 or 2 or 3% of the market participants? Maybe, but it's certainly an opportunity that would have never existed for those traders without these programs. So that's why I'm a fan of them. The vast majority of people that are not going to invest the time and effort to develop their skills will lose less money than they will in live markets. And the very small percentage that will succeed will have access to far more capital and rapid growth than they would on their own.
It's always interesting to me just to talk to somebody who's seen spaces evolve. And I feel like for the first time, I'm starting to get there in trading, where I've been at trading long enough, kind of coming into it. There was like the end of the era of the floor, all of that I had no association with. And but being able to see almost things like even before COVID and now, and the ranges we used to see like in the overnight session and how things have changed. I'm starting to feel this way myself. You've experienced it in almost multiple industries, but with the time that you've been in the, let's say, the online funded business with Top Step, the space has evolved and almost exploded kind of recently. From your perspective, how would you say the overall landscape or the health of the online funding industry, how would you say it is right now?
We're starting a self-governing association, some of the largest funding opportunities, funding companies. We're all talking to each other. We've been working on it for 6 months. I think it needs a self-governing association. I think people are treating it like a cheap casino. They're scratching at certain traders, get in, aggressive marketing, flash sales all the time, selling them a bunch of accounts that are just scratch tickets in general. But if you flip it over, the payout policy on them is garbage. I think that's all wrong. I don't think it helps a trader. I think you're feeding them the crack that they get addicted to. Trading's not glamorous and fun. It's hard to develop skills, but once you have the skills developed, kind of like golf, you can start trading and playing golf pretty well, but you got to keep working on them. Anybody that pitches you like this, like it's going to happen overnight, and we all should know that by now that it doesn't. And we all should know that you need to start understanding yourself as a trader. I just don't think a lot of companies do that. We spend a lot of money on it, reinvesting into our dashboard. We got some really cool stuff coming out with Coach T, our digital performance coach, where we're able to use your trading data to feed back to you, to give you trading, not tips or not tell you how to trade, because teach a man to fish, you don't just give him a fish. So that's what we're doing. I just don't see any other companies that are investing that much. I do. Earn to Trade's great. I think UProfit is great. I think there's some solid ones in the future space, but then there's these discount prop firms. I don't name names, but this discount prop firm, I think has problems to it. It's a smash and grab. It's a high volume business. And I don't know how much they develop traders. And I know we got a lot of traders that come to Top Step that are, they call them refugees of the discount prop firms. One of the biggest payout guys from one of the discount prop firms is actually trading with us, and I'll be talking to him about why he's with us over the $1 million or whatever he made at somebody else. Top Step's here to develop traders. I'm not pitching this right now. This is what we're doing. But these discount prop firms, I don't think do that. Forex, FTMO is badass. Those guys are good. They've been good from the get, but then you have these other ones that are kind of building up around them, and like instant funding, things like that. What is that? I mean, are you helping a trader, or are you just saying get funded? Because I mean, getting funded, just super easy. You didn't learn anything. Like people have talked about Top Step having harder rules and things like that. Nobody in their right mind in trading has ever said no rules is going to give you successful. So you got to have these risk management rules. Anybody who says, you know, you don't need downside, anything downside or anything like that, I mean, that's scary or whatnot. You're supposed to be developing traders and then putting them in your prop firm to, for the benefit of the prop firm, to trade prop funds. A lot of these people don't even put them live. We put traders in sim funded and live funded. Sim funded, your trades inform our trades. So that really helps us make trading decisions on our prop firm. Top performing traders, we call them up like the Yankees would call up somebody from the minors. We're starting to do that more. We're going to be talking about that more. We'll bring up people as they started trading well on a sim funded account, which is our express funded account. And they'll eventually trade live money. That's the exciting part. But these other companies, they don't put you on live. Like, who wants to be a sim trader their entire life? Only, even if you're crushing it, you want to go live. Like, take me to the next level. That's my rub with the other folks. And then the aggressive marketing. I mean, come on, if you got a good product, you don't need to quote unquote hoard out, so to speak. And then invest in your traders, invest in you're bringing them education, bringing them content, supporting them. So discount prop firms, I don't believe do that because they're so razor thin on their margins, and you got to have some cushion to reinvest back into your traders because they need more than funding. Our big line at Top Step is they come for the funding. I know that, we all know that, but they need to stay for the development in the community, and that's, you get that whole package. That's a great one-stop shop to develop as a trader. That's my learnings, and that's just my perspective.
Yeah. Do you feel that there is maybe an explosion of this popularity right now, which is kind of skewed too far one way, where there are just a lot of predatory things right now, a lot of, you know, if you have the intelligence or the discernment to look beneath the surface, the structures are quite bad in a lot of this. And in some way, it's a good thing of making the space more popular, and almost as a natural evolutionary thing, these players will die off, or somehow it'll autocorrect back to a thing that actually helps the trader and it is not as predatory. Or do you think there's a reality where this whole space just becomes really sloppy forever?
I think with the self-governing association that we're putting together, we're going to draw a line in the sand on, we're all getting audited. We all combined together, said this with our regulatory attorneys, said this is the best way to set principles that we all live by as evaluation companies that fund traders. Evaluation companies that fund traders. You're evaluating them and you're using that experiential learning safety platform to help them develop, to then give them an opportunity with a prop firm that they eventually trade live. So that's something that I believe is going to help. We're going to ask service providers all to join that because I think they want the business because it helps people be better ready to trade their own personal capital, or they keep Johnny from losing his kid's college fund because he's safely able to learn. Now, I think it's going the right direction, but it's starting to go the right direction because traders, those aspiring to be traders, there are gamblers out there. The gamblers will go seek out the gambling ones, and they will go to the nickel slots or the penny slots or the sticky floors and the cigarettes smell, and they'll be pulling the slot machines. That's not trading. There's just short term. Like Corbs, lucky doesn't last long term, and it's nice to have a big winner one day. But like the industry, to me, is going to be cleaned up in a way that some folks are going to say, hey, we created this self-governing association. Anybody's able to become a member, anybody, and you'll be able to get a little, like, we're a part of this membership. It's a nonprofit. It's third party. It's not even owned by any of these companies. We'll have long story short, we'll do an announcement here soon, but it's really exciting, and it's really there to help the trader and kind of protect and validate the industry, because this industry has been here forever. Prop firms have been here forever. When I first started this, my buddy goes, hey, it's like you guys created an e-prop. And then, yeah, we basically did, because prop firms evaluate traders and then they put them on their prop account. And we just took that model, and other people aren't following that. So I think it becomes muddy for a little bit, like right now. And any new industry, when it starts and somebody kind of defines a problem, and there's a group of people that recognize the problem, kind of your core users, your core trader base, that starts to catch on. And we started in 2010, and it caught on in 2014 and 2016. And more and more companies started coming out here, and they're good in the beginning, and then they just kind of got, I want to say, less about the trader, more about letting them pull the as many times as they can do it type of things. As many accounts as you can, copy all these accounts as you can. If you have one account, you do it well, sky's the limits. So I think that there's going to be traders will know, and traders will go one direction, and the gamblers will go another, and the gamblers are going to find out, why am I in this business to gamble? I can go to the casino and have better odds of getting paid out, at least. But if you actually learn trading, this is with you, as long as probably golf is with you,
How do you feel about these? Because we talk about a lot in my room, these funded accounts, these things versus trading your own money. Do you think it's valuable? Because I'll give you my take on it, but I'm curious how you feel on those.
Yeah, I think that they are very good. I think that they are, they have to be handled in a certain way, and they're very easy to get finessed. So you need to know what's happening, and you need to know how to navigate it. But I think it is an incredible bridge between trying to learn something in a simulator and then making that transition live. And the process of trying to do that it can be very, very taxing. If you take, even if you're doing this right and you say, okay, this much money I'm dedicating to my trading, and I'm only putting in a quarter of that position as my initial funding, so that if something goes crazy, I'm protecting myself here. Even if you put in $5,000 of your own money, when you see that go away, and the very nature of trying to learn how to trade, we have to make mistakes. It's impossible not to. And every time we make mistakes, the market is going to take money from us. And the process of making that transition has to be one of the most difficult things that we have to do as traders on the come up, is making this transition to a live environment. And when we can do a funded account where there still is risk to reward, we put in money, nominal compared to what we could be losing on our own. And we have the benefit of, I can get a funded account that I can start making money with this week if I pass. That creates that dynamic. And so I think it's very important. I don't think there's a good reason to start trading and go to trade your own money directly. I think that if for nothing else, to help make that transition and help you get the proof of concept that you need for your trading business, should happen in a funded account. And then if you want to, from there, go trade your own money or something, but at least you have a tangible result. This is the other thing I think is really powerful. People that come even through Trade Act, it is very difficult to get somebody who doesn't know how to trade to a real result, because you can make money in the market any given day, but can you have a profitable week, or can you have a profitable month? This can take a very long time. But the process of getting a funded account, even if that doesn't directly translate into money, having that win is so powerful, just for the motivation of the trading journey has so many ups and downs and things. And when you can anchor it to a win, that's also a very powerful thing. Now, with the caveat being, I think that they are predatory. I don't think that many of these companies are run well at all. And I think they definitely have downsides, but I think they're a net positive if they're used the right way and traders aren't abusing them. And if traders aren't confused thinking that if they do something, they're going to have $50,000 of life-changing amounts of money, when the reality is that is marketing and far from what's the truth.
Well, so I agree with you on all that. If it is, first of all, it's great for younger traders.
Yeah.
The discipline. right? You have to have discipline because otherwise, you'll blow the account. They are definitely predatory. Look, it's like a casino. A casino wouldn't be in business if people didn't lose money. So these companies wouldn't be in business if people didn't keep blowing accounts. But I do think I have some. I mean, I trade my own money, and then if I'm done with that or whatever, or I'm not looking. There's no great setups. I have like a bunch of funded accounts through these, just two. Now I can say it's not right to say play with. I still want to be disciplined in it because I'm still taking money out of it. So I don't want to blow the account, even though if I blow it, okay, it's only cost me $100 and something as opposed to my money. But I think it's, like you said, it's excellent for newer traders to get that discipline and do it. But if you're doing it as a gambling option, oh, wow, this is costing me, they're always running these 80% off, 90% off. It's only costing me $35. Well, you know what? I bet you a lot of people look by the time a month or 2 months are over and like, oh my goodness, I bought 20 accounts for $35 each and I lost all of them. That adds up. Sure. So that's a foolish thing to do if you're going to do that. And that happens with most people.
What are your thoughts on funded accounts and funding programs?
Gift and a curse. From someone who was, I came up as a trader and kind of did things the tough way. I didn't have a lot of capital. I got good at trading, but realized that, the results that I guess I thought I was going to get, like 1,000,000% a year, wasn't actually realistic. And then when you start seeing realistic results, you're like, man, like maybe I can't be full-time trading off this like $5,000 account. So I had to go the hard way of like, and this was, back in the day, right? Going door to door or phone call to phone call, asking people to manage money and stuff like that. And it was horrible. So I always look back and say that, man, if I knew about online prop firms, I don't even know if they were around. Maybe they weren't. I didn't know about them. If I knew about online prop firms at the time, that would have been the perfect place for me because I was good at trading. I just didn't have a lot of capital. If you can give me access to capital and I can trade it and make more, boom, perfect. So I do think it's a good spot because there is a skilled, but just don't have the capital to leave their job or it's not right now. They have to wait 10-year, 15-year plan, something like that. However, like anything else, as soon as something gets popular, they all just pop up. And there are a lot of them out there. I'm not familiar with most of them. I don't waste energy on that. But there are some good ones. And I'm sure there are a lot of bad ones that I've seen that have unrealistic kind of challenges. I've heard of ones getting closed down because of doing this and doing that. So I think it's like anything else. I think you have to do your due diligence. You have to make the smart choice that's appropriate for you. You're trading the type of trader you are. You don't necessarily want to change what you're doing that drastically to have something that works. Hold on one second. Dude, relax. Hold on. I'll be done in a little bit. Sorry, my little guy is knocking at the door here. But I do think it is beneficial because it gives a trader that has the skill and the want, the desire, but not the capital. It gives them a path to turn themselves into a success story. And I do think as the years go on, I think we're in this phase right now where they're just popping up all over the place, like whatever the next, I don't want to call it a scam, but the next popular thing is. I think there will be in the, not so far future, a time where kind of we see a bunch of them fall off and then I guess the cream rises to the top or whatever the saying is.
Yeah. It's very interesting to see these very repeatable patterns that just happen in everything. Something like these funded opportunities, there's good money to be made. So they just pop up and it gets so overwhelmed and it gets so predatory and it gets so bad that it just goes too far. That somebody steps in, and even at the time of this recording over the weekend, one of the big Forex firms are, funding companies, I should say, is facing some regulations and there's some big lawsuits coming out. And you're just going to start seeing, like you said, this domino effect, and you almost can just see it happening in real time. It's just like so much advertising, so much predatory type selling the dream gets so big that the whole thing just has to like collapse on itself. And then it will start kind of a new cycle again. But yeah, very, very interesting to see how it happens. And maybe with I'm sure you're aware of kind of the, news that has happened over the weekend here. Do you think that the funding space is at risk of ever going away completely, or there'll always be good online funding companies?
I think there always will be good ones because there's going to be those that do it legit. But like you said, I think most will burn, and then the strong will survive and raise up, and you'll have a kind of a small amount of quality. And it'll be great for the trader because now you have quality funded places to go to. But yeah, I do think we're getting to that tipping point because I've been hearing more and more news about this one going down, this one going down, this one going down. And I can tell you what, the thing that a lot of them reach out to me because it's, coaches or whatever you want to call us, like we're very easy, I guess, people to be like, hey, partner with us and send us clients and blah, blah, blah. And one of the questions I always ask them, and this goes back to Mike Bellafiore, and one of the things that I really enjoy with what they do at S&B Capital is that they invest in their trader. So it's not just like, hey, come with us. If you don't make money, we'll spit you out and bring the next person in. It's, hey, we're going to invest time in you. We're going to work with you. We're going to train you. We're going to help you review and give yourself a chance to grow because traders need a chance to grow. And one of the questions I always ask these prop firms, like, well, what do you do to support your traders? Like once they pass their challenge and they're in, what do you do to support them? Do you have weekly meetings? Do you review this? Do you offer education? And none of them ever seem to have an answer. It's just like, well, if they're good, they're good. And when they're bad, we take the money away. And I just don't think, I think, and maybe this is why I'm not the best business person either, but I believe in people first, where it's like, if you're working with someone or someone's working for you, you need to invest in that person first and foremost. And if you do that, you're going to get the most out of that person. But if you don't do that, then it's kind of a red flag. Like this is one of those churn in and churn out type of operations, which sucks and isn't good for a trader. But I also understand traders that don't have a lot of options out there. You got to do what you got to do. And I look back at, again, me 17 years ago or 15 years ago when I first started getting good, like I probably would have done the same thing, just went for it because I didn't see any other way.
Being that you guys are a legitimate prop shop and at the top of the list, with the explosion of funding companies that have come into the scene, generally, what's your perspective? Net positive or net negative for retail traders, these funded companies?
I wish I understood more about them. I really don't. I get to talk with a lot of developing traders. Some of the traders that we've worked with have come from this, especially it seems like in the last few months, and last year probably. It just sounds like some of the rules are a little confusing to me. Like I don't understand why some of the rules, when learning about them, some of the rules seem quite confusing as to why would they make that rule. I don't believe, in my experience, isn't that anybody that says trade just this way, or trade this is the only way to trade and you can't do anything else. It's kind of limiting, unfortunately. What I do think is that you should take if that's the only thing you're going to do. But what I do think is you should take the edge that's present in there and understand what are the other ways that you could apply it. What are the other things that you can do that would make sense to you? So, anything that gets traders trading is a good thing. But I do think that you have to be a little careful with some of those from what I've heard. Again, this is me not knowing really anything about those. Just talking about it from the perspective of what I've heard from other people. I think you want to make sure that if you're going to go that way, that you understand what you're trying to do and what their objectives are. And you want to make sure you're lining up your objectives with their objectives.
How's everything looking in the world of funded companies? Anything coming down the pipe for regulations, or everything still good in the world?
Yeah, I mean, so let's split it off. Obviously, we're in the futures world, and it's good to see what I had foreseen, which was that a number of the Forex firms have gotten in a little bit of trouble and sort of dragged the whole marketplace down a little bit. But with the new resurgence of Top Step, not that they ever went away, and I know that you're doing some stuff with them from a media standpoint or participating. They're out there in the forefront, and I think that with a firm as big as them and it's kind of the OG, they're probably providing a decent amount of regulatory cover for the whole rest of the market when it comes to futures. Doing it right, keeping people on sim for just a period of time, and then putting them live and that whole thing. So I think that kind of validates and maybe reduces some of the risks associated with the futures funding programs. But Whether in the US or anywhere else, I would be very weary of all the FX CFD ones. Even if you're outside the US, where a lot of people still trade those products, find your way down over to futures. Just find your way to futures. Whether you know it or not, you know, it's the problem is not the firms. The problem is the product. That those products are flawed. FX is meant for big institutions. The fact that it trades trillions of dollars of notional value is meaningless. I hear about that all the time. Doesn't have anything to do with liquidity or anything. The spreads are wide. The feeds are made up. So just get out of that. Come over to futures, the futures side, and I think for the most part, things look pretty solid from a regulatory standpoint. The only things I think might go away, maybe all these, you know, multiple accounts, 10, 20 accounts, that might go away at some point. Maybe some other changes, but for the most part, I think it's an amazing, I say this every day in my trade room. You know, I started trading in 1994, traded my first E-mini in 1997. And you might hear this from marketers a lot, like, this is the best time ever to do this, to invest in real estate or gold or crypto or whatever. This is the best time ever to try to learn how to trade futures markets, because you have prop programs that are low cost, a great way to learn. You have micros, which are appropriate for a lot of these prop programs until you build your account up. And you finally have a growing ecosystem of people like me and Aaron and others that are hopefully doing it right here to help you along your journey and accelerate it for you. So good time to learn about these markets.
When I started, it was an entirely different story.
Yeah.
The entry into prop was very expensive. And then you had something called the Bloomberg terminal. I don't know whether you've gone through that as well, which basically costs you about, at that time, it was $3,000 a month, which you have to recoup from your profits. Even if you've lost money, that still stays as kind of like a debt, and that gets carried over into the next month. So even if you make money the next month, they just take the money for it. It's like,
that's very interesting.
Yeah, so when people are like saying to me, oh my God, but this is expensive, I'm just like, you have no idea what you're saying, right? So yeah, for me, I think it's been quite a revelation. First of all, you don't have to leave the house. You don't have to be in the office in like some ungodly hour that all prop trading firms used to make you do. Even in London, you know, I trade the NYMEX market. Over here, that means the market doesn't even open until 2 p.m.
Right.
They make me go into the office at 7 a.m. in the morning.
Really?
Yeah. So you'll be there and you're like, this is just a waste of time, man.
You'll be playing your video games waiting for it.
Yeah, playing World of Warcraft. Yeah.
Very interesting. Okay, cool. Now, as far as the online prop funding goes, it's obviously making a big, or it's made a big.
It has, yeah.
Yeah. And let me ask you this. What do you think is the overall net positive or net negative?
Yeah, so the net positive is definitely that whoever's going into trading, typically how the story goes is that they want to trade, they plow in 10K of their own cash, which for a lot of people is a lot of money, right?
Sure.
There's not that many people out there. They're like, yeah, I just lose 10K, no problem. And then every single time that they do that, they're unprepared for the whole, you know, mental adjustment. Psychology hits them right across the face. So even if they've done so well on the demo, they lose the 10K. That's it. And then the psychological traumas are created, and that becomes much more difficult to deal with later on. Whereas with these prop challenges, you pay like a fraction of a cost to get some access to the biggest pro, I think, is the fact that when you're at a prop challenge, when you're doing an online prop challenge, it literally pokes into that survival instinct that you need to learn about, and you need to learn about yourself, how you're actually going to trade with actual skin in the game. And for some reason, when you sign up for a challenge, people start getting those emotions. And they start messing things up because you have some of them give you the daily loss limit. There's a trailing drawdown. There's like a whole bunch of stuff that they've never thought about when they started to trade on their own account, right? So knowing how you're going to behave in the high pressure environment and how much you can actually mess it up, that's invaluable.
Yeah.
To do it for a fraction of the cost rather than 10, 20, 50K of your own money.
Right.
So that's definitely a pro. The problem that I can possibly see with all of these companies in the future is that if they come under some kind of regulation, things will change, and they could disappear. I hope not, because in some form, those kind of prop trading firms, prop shops have been around for a long, long time. So I don't think it's necessarily going to happen like 100%, but there is a little bit of a weirdness that they're not really funding people for real, or even if they do fund them, they're like, oh, it's still a sim, but blah. So some regulators might have a problem with it. I don't have a problem with it because I've traded the live markets. I've gotten hit with ridiculous fills that had nothing to do with the fill that I wanted. So actually trading on a sim, it's, for me, it's better because, when you get to a certain size, it doesn't matter if you're trading like 1 or 2 contracts, it's not going to affect you. But you get to 30, 40, 100, 150 contracts, it's going to start affecting you. And there's no problems with executions in sim, right?
Yeah. What would you say are some obvious similarities of people that they come in, they just wash out, and they never get funded?
I can't tell you how many people have such incredibly good days, and then you look at their P&L on our risk board and they're negative, or they blew out that day on a hit or loss limit. That's very common, very common. Doubling down on, cannonball, doubling down on your trade, doubling down, that's a big one. Just no discipline in general. I've always been a big preacher of the markets pay the discipline, and the undisciplined pay the markets. And if you think about that, and think about all your trading on your personal account, the times you were undisciplined, how much money did you give to the markets? The time you were disciplined, it may not be as much money as you gave the markets, but you start getting money that you're paying yourself. And then you stay disciplined, and it starts becoming a consistent thing. I know a lot of traders that I see want to make millions of dollars. I wanted to make millions of dollars. I started this conversation now like I was a low to mid 6-figure year trader. That is a hell of a lot of money. We have a lot of economy workers, Ubers and whatnot. So what I see with them is they're a little bit more patient to get, because they're already having an income. So if you already have an income, because we survey and we talk to traders, if you already have an income, they're not so hungry to make money. If you're not so hungry to make money, as well as I do, and I see your trading courses are awesome. You help develop a better process for yourself, and we all know a great process allows you to see the results of that. And then if you're smart enough to say, these results, I can see where my weaknesses and strengths are. That's why we're building a digital performance coach that should help you do that. That's why you should have a trade report from whoever you're with to show you, so you can at least look at the man in the mirror, so to speak, of how you're trading. So they go for this big high expectations. I think traders should go for scratch first, break even after a few months. Can you do that? That's tough in and of itself. Once you do that, then you start building, you're trading up from there. Coming out of the gate swinging is the big ones. And some days you don't have it in trading, and traders need to know and shut it down.